What's up guys, welcome back to InvestingPH. So today we are going to review GLO Telecom, a leading telecommunications company in the Philippines. Now I would also be creating another stock review after this for PLDT to have a comparison with the two. This way we would have a complete review of the 4 telco companies in the Philippines. Now there's a link below of my stock analysis video of Converge and Dito. I suggest you watch it as well. So before we start, I would really appreciate it if you kindly hit the like button, and if you want to learn more about investing and finance, might as well hit the subscribe button as well to be updated whenever I post new videos. With that, let's start. Now, who is GLO Telecom? The company serves the telecommunications and technology needs of consumers and business across an entire suite of products and services including mobile, fixed broadband, data connectivity, internet, and managed services. It has major interest in financial technology, digital marketing solutions, venture capital funding for startups, and virtual healthcare. Currently, Globe has 84 million mobile subscribers and 3.7 million home broadband customers and 1.4 million landline subscribers. The Globe Group is composed of a lot of companies. To give you a clue, this is their corporate structure. Now, I couldn't get a much clearer copy of it since this is the only available picture of it in Globe's website. So we won't dive into each one of these because it would really take a long time. But if you want to know each of it in detail, it's provided in their quarterly and annual reports. But I would just want to point out some details. Now, Globe isn't just concentrated solely on internet, landline, mobile data like most of us know. They are also engaging in different kinds of businesses such as data centers and like the popular GCash app, at which falls under Globe Capital Venture Holdings, under Globe Fintech Innovations Incorporated. And they also provide services for Filipino businesses located in other countries as well. And one more business of theirs is Kickstart Ventures Incorporated, which is a wholly owned subsidiary of Globe, at which is the most active corporate venture capital firm investing in seed and other digital startups. And they also hold EasyPay, so another familiar name, at which they have 77% ownership of it. This is the leading electronic payment service provider in the Philippines. So that's a quick summary of some of their business. Their other businesses are related to IT solutions and services and telecommunications related businesses. For Globe's major shareholders, Ayala Corp holds 14.09% ownership, while Singtel, Singapore Telecommunications, which is Asia's leading communications group, holds 21.44%, and Asiacom, which holds 54.26%. This is also a company owned by Ayala and Singtel. With that, let's go to their financials. I would still be following my checklist to have a quick analysis of the company. Again, please still do your own research for the company. And if you want to compare their financials to their competitors, I have a link below for Converge and Dito. As for PLDT, it would be in my next stock analysis video. First, let's look at their revenue. We can see ever since 2011, they have a positive growth every year. The only exemption was in 2020, at which their revenue decreased only by just 3.68%, which is not bad for the pandemic year, and in their latest 12-month, they have already recovered quite a bit. With this, for the past 10 years, they have a compounded growth rate of 8.81%. And as for their net income, although there are some years that has a negative growth, they always recover it in the succeeding years, like for 2013 and 2014, same story in 2017 and 2018. And for the COVID years, in 2020, they are already recovering in their latest 12 months. With this, they have a 10-year compounded growth rate of 8.57%, which is another good percentage for them, knowing they are already a large company. As for how well they are producing net profits from their revenue, their net profit margin stands at 12.37%, at which they are averaging at 12.44% in the past 5 years. This is well within their industry average. PLDT has a net profit margin of 12%, while Converge, which is solely focused on internet services, has a margin of 26%, while Dito has a negative net income. With this, Globe has a good growth both in revenue and net income, and they have consistent net profit margin. Moving on to their equity. Now for the pandemic years, Globe acquired more debt to hasten their growth due to the demand for internet services. Though their liabilities greatly increased, this didn't much affect their growth in equity. For the past years, they've had a positive growth, only in their latest 12 months where they had a negative growth. Now we still don't have the full data for 2021, so it may still change after the release of their financials. Still, it's just a small negative growth for them even with all of that. With this, their 10-year compounded growth rate is at 5.78%. Moving on to their ROE, the return on equity is at 26.7%, which is really high. High ROE means the more efficient the company's management is in generating net income and growth from its equity. Now, like what I mentioned earlier, Globe increased their debt to grow more this pandemic. This was also reflected in their ROE, which slightly increased. Usually, Globe's ROE stands at 20 to 25%, which is still quite high. Now, if we compare it to other companies in their industry, Tel is at 18.4%, Converge 20.8%, and Dito has a negative ROE because the company isn't generating any net income. Moving on to their debt to equity, in their latest 12 months, they have a ratio of 4.19. Although in their quarterly report, it says their debt to equity is only at 2 point something. But I'll just stick to my computation. This means they have 4.19 peso of debt for every 1 peso of equity. So this falls in our proceed with caution category. So is this alarming? For me, this would be alarming if the company doesn't generate any cash flow to begin with. Like what we've seen earlier, Globe's revenue and net income is consistently growing each year. This way, I think they can pretty much manage their debt well. This was the only year they ramped up their borrowing, because for the past 10 years, they are only averaging by about 2.78 in their debt to equity ratio. Still, this would be an X in my list since it's still above 2. Moving on to their free cash flow. Now for the past 10 years, they always have a positive free cash flow. But again, since they ramped up their capital expenditures this pandemic, this led to a negative free cash on hand. This move is almost the same as what PLDT did. They ramped up their spending as well in the COVID years. Same as for Converge, leading to a negative FCF on all three companies. Now for Dito, well, they are already producing negative net profits to begin with. Now if you look at it clearly, this drastic change in capital expenditures can be seen in the demand for internet access, especially for this pandemic, where a lot has taken their work at home and also for the online classes that has happened. So for me in Globe's part, this isn't alarming, seeing how they are growing their revenue and net income, how well they are using their equity to produce profits. But for our list, this would still be an X since their FCF had a negative downturn for their latest 12 months. But again, I just want to connect each line of my checklist to get a much wider view of what is really happening. With that, our next valuation would also be an X since their free cash on hand is negative. To compare it, PLDT also has negative FCF, Converge the same, while Dito has no long-term debt. But just want to detail more on Dito's part. They also have negative free cash. It's just that they don't have any long-term debt. Now let's take this as an example. All three, Globe, Tel, Converge, has negative FCF and would definitely fail this checklist. But again, all three have good financials in their income statement, growing their income, producing net profit, growing their equity as well. As for Dito's part, they may have no debt in their balance sheet, but look at where they are. They are producing negative net profits. So in looking at your checklist, be sure to always connect ratios. Don't just look at a single ratio. Look at the story behind it. Look at the company as a whole. Same for their current ratio, where they have a current ratio of 0.68, so below what I want. Now I explained this in my past stock analysis videos, that you should look how well the company is using it. We can see in Globe's part, they are putting their assets to good use, growing the company well. So this actually offsets this low current ratio for them, because their growth in their income statement is actually quite good compared to its competitors. Moving on to their PE ratio. Now with the drastic increase in Globe's share price, same goes for their PE ratio. It is now at 18.16. Now we can see even with that massive increase of more than 50% in just a single year, their PE ratio is only at 18.16, still within industry average. For Converge is at 30.01, Tel 16.19, while Dito, since its earnings are negative, they won't have a PE ratio. But I remember when I did an analysis of Dito, the stock market priced it almost at 300 plus PE ratio, which is really wow. People are believing Dito would even beat Globe and Tel in terms of earnings to price it that much when it's still just a small player. And remember, growing that fast in the internet business isn't that easy. You have to create towers, cables, everything. It's not a simple process. For Converge, though it's priced at 30 PE, it's still well within the capabilities of the company. Converge has been growing quite well this past few years. Now, I won't use my normal valuation of PE ratio here which is less than 15. What I want to look at is the average of their industry. So for industry-wise, their PE ratio is still well within norm, so it's still actually a check for the PE ratio. As for Globe's dividends, even with the increase in share price, their dividend yield still stands at 3.8%, which is still high for the pricing right now. Now we can see Globe is consistent in giving out dividends. It's actually in the policy of Globe at which they pay out 60 to 75% to their shareholders. Now, is this big for their payout ratio? Well, most of it goes back to them since only 9% of their shares is owned by the public. Most of it is owned by them as well. Now, for the company's MOAT, so Globe is a leading internet provider in the Philippines. And not only for that, they also hold the leading e-wallet application, which is GCash. And as you can see, GCash is not only for payments, but you can invest in it as well. Now, I don't know the credibility of this site in terms of coverage. This shows the area covered by Globe. So it's almost the whole country. And if we compare it to Smart, they really are toe-to-toe on this one. So with that, in both fields, Globe is in a good standpoint. They are the #1 mobile brand in the country. And for their financials, their revenue, net income, equity are growing for the past 10 years. Although their debt is slightly higher this pandemic, we can see the reason for that, and it's still manageable for them. So for a MOAT, Globe has a good competitive advantage towards its competitors in their line of business. Now for their leader, their CEO and president is Ernest L. Koo. He has been a director of Globe since April of 2009, so he's been in the company for a long time now. And their other directors are very well experienced, the Ayalas, and also some of the leaders of Singtel, which is a leading telecommunication company in Asia. With this, we are sure the one in charge of Globe is very well experienced. As for my buy below price of Globe, my computed intrinsic value for them is at 3,448 with a 30% margin of safety, having a buy below price of 2,413. With that, this ends my analysis of Globe. Again, let me remind you guys to please do your own analysis. Some of you may have asked me through email or in the comments section below if this stock is a good buy or not. Well, do understand why I don't answer those questions. Because first, I'm not your financial advisor, and I would contradict what I'm teaching in this channel. I'm always reminding you guys to not listen to other people's opinion and use your own research to come up with an answer if this or that company is a good investment or not. So please forgive me for not answering those comments or emails. I'm not being rude or anything. Anyway, my next video would be an analysis of PLDT, so better watch it as well. This way you get to familiarize yourself with the different companies in this specific sector. So before you leave, be sure to hit the like button, and if you still aren't subscribed yet, might as well hit the subscribe button as well. Thank you and see you in the next video.